Is this it? Is this the time? Is it over? Do we have more downside to come? Now, a lot of you are having a lot of questions around these tariffs. If you're new to my channel or new to this news and just a little bit concerned, hopefully this video can alleviate your concerns by getting an idea of where we're headed, where we should recover, and some levels on the charts that will give you a little bit more confidence that we are headed back to the upside. I know a lot of long-term investors are happy for this big pullback, but they're also a little concerned, like, is this another 2022 situation? Is this another 2020? Is this another 2008? So there's a lot of those questions looming. For my seasoned investors, you keep buying the dip and buying the dip and buying the dip, but as an educator here on a public platform, I know a lot of different people come to these channels and platforms, and we're not here to fearmonger. We're here to educate, inspire, and get people excited about these markets. When you see red, that typically means it's on sale. So the more specific that we get in this video to come, I want to let people know that some people are short on cash, right? So I am very aware of that you may not be able to buy the dip and then buy the dip again and then buy the dip again and then buy the dip again, just because the concerns of people's earning potential, right? I get that. But if you have a lot of liquidity, a lot of cash on hand, you're loving this because you don't care how far it dips. You just keep buying and buying and buying. So I'm talking to both groups. All right. Love you all. Thank you so much for all the support. We've had an amazing, amazing community here on this platform. If you do want to join our Discord following this video or during it, the link will be down below. We do have our life and business coaching and entrepreneurial side of our Discord, a community that is also a little bit faith-based as well. So if you need a little bit of inspiration and uplift and just that holistic perspective, that good energy, maybe this is the right community for you to join Leverage University. If you're also here for this trading situation here, this, as I call it, a situation, a skill set, we do have our trading floor where I'm giving ideas going into swing trades, day trades, education, recordings, trainings for you. All of it is included inside of our Discord, which I'll show throughout this particular video. All that being said, without that introduction, without further ado, let's jump into it today, give you some ideas of where we're headed. Is it over? We may be holding our horses. We got some levels that we still need to break below to confirm. All right. Trump dashes hopes for last-minute Canada and Mexico deal ahead of 25% tariffs. We all knew, or if you didn't know, the tariff news was announced last week that he was back on the table with Canada and Mexico for tariffs on Tuesday, March 4th, 2025. All right. We also have NVIDIA, which has been running the market, ruling the market, and all of our big tech companies that have been just keeping us high and flying higher. They have been pulling back or profit taking off the table simply because these tariffs and international trade and the borders and charging more, who's paying for what, right? So these tariffs could affect some of these tech companies, especially our semiconductor sector with our chips, our AI boom and the progression forward and all this that has been talked about with AI. Now we are in this quote unquote bubble, as people are calling it, right? I'm not here to speculate, conspire about anything. I'm just here in the present to read what has been happening in the past and where we're headed, and also at the present moment. Okay. If you watched our video from our stock market Sundays or stock sermon Sundays, which is our market analysis every Sunday at 7 p.m. Eastern Standard Time, exactly what I told folks as an idea that could happen today on Monday, the 3rd of March, 2025, did happen. So if you took advantage of that, if you're inside of our Discord, absolutely killed it. A lot of FOMO. Can't catch the whole move sometimes, but I'll show you exactly what we did inside of there. All right. A couple other news headlines here that we see. Bitcoin and crypto, really big rejection, a pump and dump, right? We popped to 96,000 with that crypto news from Trump, and then we're right back almost to 80,000. So we've given up the whole move from that announcement. So if you took profit, great. If you bought the dip and you wrote it up and you woke up this morning and you're still holding and you're like, wow, okay, was that worth it? Right? And I'll show you on the charts there. Okay. The CBOE's volatility expert warns stock market is underpricing the tariff impact, essentially saying that people have been kind of, they're just not believing it anymore, right? The this talk of a recession or the market's going to tank and it's going to crash. People have been talking that for the last 2 years, right? Ever since the 2022 dip. Oh, the market's going to crash in 2023. The market's going to crash in 2024. And it just kept going higher and higher and higher and higher and higher, right? No one can time the exact market, but there's signs that prepare you for these times that may be coming ahead. All right. And we're starting to see some signs. And here are some signs to pay attention to that I've mentioned before if you want to take note of. NVIDIA's earnings, great. Okay. The guidance forward and also Young did not really inspire shareholders and investors that NVIDIA was just going to blow it off the top. Okay. So that was the saving grace that didn't come through. We also had some inflation data that has been a little bit iffy, right? Consumer sentiment, not that good. Our most recent ISM data that came in today, our ISM manufacturing data, not the best today. So we're having these data points and these saving graces. Oh man, crypto's going to save the day. Like Bitcoin news, that's going to be great. Maybe that will spur it higher. And then it crashes back, corrects back down, right? So all of these like positive news catalysts that are coming in just keep getting rejected on the markets, and we go higher and then we come right back down and print new lows. So that is a sign that the market's still not really right, like complying to these positive news data. So that's what essentially this is saying, is that just it could be some fear mongering, right? But it's underpricing the tariff impact, right? Like you're kind of like dismissing the fact how big these tariff impacts could be for the overall market, very similar to 2018 or 2020, which was more COVID situation, but this is a little bit more impactful. Okay. Bitcoin gives back the whole move. Student loan borrowing, pursuing or panicking. Okay. Yes. Amazon. Okay, cool. So just a little bit of headlines there. Let's jump into we'll jump into the Discord a little bit later, show you a little insight there. Now let's jump into SPY. I'm not going to do a full analysis like I did yesterday. Go back and watch that video. I gave a full analysis. You can, I think, go to roughly around 45 minutes in or something like that, maybe 30 minutes in, and kind of look where I'm going over SPY more specifically. I think I did that full analysis for about 30 minutes. Okay. So what SPY did today is exactly what I talked about yesterday. It spurred up into this 597, 598 area. I told folks this area right here is kind of the line in the sand. The line in the sand essentially means that we really needed to get above this red area here that I have marked off. If we can't do that with confidence, right? A big green bullish candle. I'm not talking about you wake up in the morning, the market's green. That is not confident. That is not a true indication. We need a extreme, almost daily bullish candle that comes up like that, okay, and closes the day above that 600 level. And you can see we couldn't even get back above that 598, 599, and immediately rejected that level and pretty much gave back the whole move of this false pop that I told folks about. This was not even real. We're going to just continue down right where we came from. All right. So what should we look out for tomorrow as this headline that you see, the thumbnail that you saw, it's over? What, Brian, do you mean by it's over if this happens? If we lose 580, okay, on the S&P 500 ETF SPY, if we lose 580, that means if you see a candle or if you look in your Robinhood and roughly about 30 minutes, an hour, you start seeing 578, 577, roughly about an hour or so into the market, that is where typically we have confirmed that we're underneath 580. Okay. Now there's still a little bit of support here, but that 580 is very, very important because number one, it's a psychological level. Psychological levels are round even numbers that stocks like to gravitate towards. The 580, 590, 600, right? It's a round even psych level. Okay. So a level I'm watching for tomorrow is this 583. I'm going to watch for that simply because we have this turnaround here below 583. Okay. There is the turnaround when we got below 583 and confidently below 580, it started tumbling down to 572 and 567. Now, am I going to say that it's going to happen tomorrow? Maybe how aggressive this selling has been, because my target today for my community inside of leverage was just pulling back to roughly around this 589. And you can see clearly as we go into a 30-minute that it broke below this 589, this red line, and started turning it into a rejection. Okay. And that is where we got that continuation down even lower for that second leg. Okay. This was the first leg down right here, from here to here this morning. And if we move this over, that is our second leg down, that measured move that we've talked about. Okay. So it's stair stepping its way down. But as it goes lower, you still got to pay attention to these levels because buyers are trying to find a level to gather up together to say, hey, is this us? Is this us? Is this us? Right? So all we're doing is every little pop up is getting shorted. Okay. Do you see how every pop is getting shorted? Shorting means people are playing puts, right? Or there's profit taking and panic selling coming in. Because bulls were excited right here to say this 590 was going to spur higher, like I told people yesterday, right? But Trump came in today with that tariff news a little bit more confidently, and it kind of spurred the market in a drastic way, okay? So 580. Now, another level I'll be watching is this 583 tomorrow on SPY, okay? Now, if you trade something else, like I told my community and I tell my one-on-one clients and I tell my Leverage University members, okay? I have multiple levels that I'm looking at. So I'm looking at this rejection here, break below, retest. If we fail back underneath 583, then that tells me, again, we can reject and come down lower if there's a panic, okay? But the lower it goes, the higher the reject I want, okay? The lower it goes, the higher the retest reject I want. That means I'm personally not interested in trading calls back up from a trading perspective, okay? And I'll give my big levels for my long-term investors as well of where you may want to consider some bigger buying opportunities. And I'll go over a couple of stocks as well. All right. So here we go. I would love to see that 587 as a rejection area. Okay. That 587. So I'd want to see a candle back up in there. And that would kind of be my eyes right on that level. Okay. Because that is where we broke down below, which was 589, and we broke below, and you can kind of see there where that level broke. So we kind of never retested that 587 level that we broke. So that will be an area of interest that I'll be looking out for tomorrow, right, for a rejection again, okay, which will be right there. Ideally, higher 587, 588, 589. Those are the levels I'll be watching for ideally, okay? Now, for my call people or people that are like, man, when can I trade the upside? When can I trade the upside? You can trade the upside anywhere you want to if you so desire to. You just got to know where you're taking it to. So if you trade the upside, you've got to be cautious of that area right there. So if you trade upside tomorrow and you trade from 583 back up to 588, 589, that's cool, right? But to hold calls or hold the upside, right, you're more than welcome, but you need a push above that 591 again. Like we need something like that. That would, essentially stop this downtrend. This 587 would turn back into a support. And then we can spur it higher again. Okay, back in that 600 level. Okay. So I need a big candle push for me to say, cool, puts are out of the question. It looks like bulls are taking control. Otherwise, I'm kind of looking for these rejects that would look something like this. Okay. So that is my idea on SPY. If you are still confused or you're like, man, it happened, but I just don't know what I'm doing, now is the time for you to click that link down below, join Leverage University, or join our boot camp that starts tomorrow. This is your last chance to join our early March boot camp. I'm not doing these, I may do them once a month. I may do them once a quarter. Who knows? But these are times when I do a 3-day virtual boot camp for anyone that wants to learn this skill set, beginners, intermediates, even in my advanced. I have some advanced folks that come in just wanting to see like, what's your strategy? What's your idea? I need to get better at puts or rejections or reading the charts a little bit better or reading the fundamental data, things like that. Okay. So that is my day trade idea for the rest of the week and into tomorrow. All right. For my long-term investors, let me clear this chart up a little bit on SPY. And let me give you some levels. Okay. Okay. Do you see that we are on literally a teeter-totter, like I said? Okay. Somewhat like that. If I pull a Fibonacci retracement into the weekly lows right here, we've got somewhat of a trend break. We're coming into that 61.8%. Okay. So that 61.8% gives me roughly 570, 571. Okay. So that is my ultimate like target for the next week or so. If we start getting a little bit underneath this 580, and it would look something like this. Now, if I turn on the moving averages, that should head right towards that weekly moving average, the 50. And then if I turn on a daily, that gives me a daily 200, which would be right there at 570 roughly. So it would look something like this. Okay. So that is why I'm a little bit more confident in continuing the downside, is how aggressive these selling candles are coming down, and with a catalyst of the tariffs. Okay. So that is why I'm looking for rejections instead of trading the upside more specifically. So when would I get comfortable trading the upside? If we get a flash crash down into one of these moving averages, which would be right around 570, 567, something like that. I'm like, okay, overextension. I'm ready for, a big rebound back up. Okay. I think sellers are just still holding their position personally. All right. QQQ, we closed underneath 500. Right. So that's even weaker, is that we closed underneath a big psychological level. So you want to watch, this is pretty nice here. You want to watch this 500 and 503 level on QQQ. Okay. Or maybe 502. Okay. So that is now a rejection area. Now that broke below it, you'd want to turn that into your ceiling and look for a maybe pop back up into it like that, and then reject it right back down. Okay. And also it has more gap to fill. All right. So there is an idea on QQQ. My target on QQQ is into this moving average of 490. So that is the bottom end of the range that you would want to look to take QQQ, is 490. Now it could get aggressive, right? Like it did today, right? It could get real aggressive, and this could be a measured move. If I move this over, measure the move down, that could get down into the 485s, okay? Which is where buyers are stacked down here, okay? So watch out for a big rejection on QQQ if we stay below that 500 and 502 level, okay? Fail back underneath 500. All right. Hopefully it doesn't happen overnight, because I am ready to trade some more puts. IWM, okay? You can see clearly there where IWM is trying to head, moving averages down into this 200 level, psych level. We can turn that 210 into a rejection and ultimately back up into this like 210, 212 area. I would look for a rejection on IWM. Beautiful trade today that we called on IWM, and I'll show you where those are. So I'm going to move these down because I don't expect it to push all the way back up into 220 with this selling pressure. So I'm just moving my ceiling down for rejections. Okay, right there. Push back up into there again and reject down into the 200s. Okay, so if you're trading, please be safe. I'm giving you levels. If you know what you're doing, awesome. Okay. DIA, I'll just point out this big gap fill. That's all I'll say on DIA. Dow stocks, US 30 for those that trade futures. It does have a big gap down below. All right. Amazon, more gap to fill. Like I told folks, coming down into 200 and ultimately down to my 190 target, filling that remainder of the gap. Google, you can see here, I've got Google filling more gaps down here into this 160 level. And if it breaks below 160, we're coming all the way back down in the 150s. Okay. SMH. Our SMH is our semiconductor sector here. Okay. And you can see that we have now broken below this 240 range with confidence. And that is because of the tariffs, like I just said, with the chip sector. So this includes NVIDIA, AMD, MU, ARM, Intel, anything involving chips. You can kind of see here how aggressive these tariffs are affecting the chip sector. So if this is continuing down below to that next moving average and has more downside to go, then that means NVIDIA has potentially more downside to go into that 100 level where it's headed if it breaks below 115. AMD waiting down into these low 90s here, and then maybe AMD can tick down into the 80s, but low 90s waiting on AMD. All right. QCOM, you can see there, more semiconductors. There's TSM, more there, and then AVGO filling its full gap right back to that 173 area. Beautiful. All right. Cool. Let's check on Bitcoin. Beautiful rejection there. You can see it's coming into our add 1, which that was right at 80,000. Add 2 is somewhere in this 70,000. And then I've got this moving average here, which is our 100-day weekly moving average, which is right around that 60,000 level. Okay, which would be really add 2 times add 3. And if we tumble for whatever reason, who knows? Final add down into the 50s and 40s, maybe even 30s. You got to be prepared for these different additions. Okay. Beautiful. Love it. Ethereum starting to break below this kind of 2100 level, but it is as a psych level at 2000. It's going to try to hold that up. If we can't hold up or reclaim 2100, I think this might turn to rejection. We're coming back down into that 1800 and potentially just 1500 site level. So I've got these lower levels for a reason, because when this selling pressure and people get fearful, it gets really aggressive. Okay. And I don't want to catch a falling knife. I'd rather just, dollar cost average on the way down and then wait for that flash crash to kind of come in. All right. That's all I got, everybody. I think so. That's all I got. So be prepared. As you can see on the charts, we've got more downside potentially, but if we reclaim some levels and we hold some levels, then we'll confirm if we're headed back up. All right. But we're staying below these levels. It's continuing to sell. I personally love it. We're playing the downside with puts and just absolutely killing it. So to end this off, I'll show you the Discord as always do, because we got some new folks. You can see here that our sections are sectioned off, our trading floor. And if I go into today's day trades, I gave exactly the signal plus the charts. Watching SPY entry, and as you can see, this timestamp, so that was 7 minutes into the market. You can see how SPY looked. It was sitting at 597. I signaled puts for 595 for a one-day expiration, or 594 and 593. So all these were in relative range for any account size. Okay, talking about $70 to $180 per contract. Okay, so anyone could have technically participated. Okay, and I try to do that really strategically, up 20%. And then you can see that fall right there. And then congrats, all signals green, IWM puts. I called that in live trading, and Palantir puts. I even gave another entry for Palantir puts at $89 per share. Gave how the chart looked. I said there was a gap below. It was going to come down into that 84 level. And it did that beautifully, gave entry. Okay. Called Palantir again. There's the big red candle right there. And it continued even further into the gap. So I timestamped these and look at where Palantir ended up, $83. And there was the entry right there. Absolutely beautiful trade. Trade wins here. There we go. Where are bears? I love it. Okay. Maybe about $700-800 today, roughly. There's trade 2 on Palantir. Held that a little bit longer. So that was a little bit more. And then there you go. So you add those two up, close to $1,000 a day, which is my normal $800 to $1,000 is a solid day for me. I'm cool with that. And then there's all the green trades right there. Okay. So shout out to everyone else in our community. There's Dreama, 40% on her trade. Beautiful. Shouting out everybody. And if we go into our live trading here, you can see that there's Billy. Shout out to Billy. Green, 100+%, 40% there. Shalitha closed out 50% on Palantir. So we're just absolutely killing it. Okay. I love that the analysis plays out because people can learn to see, hey, this is what's supposed to happen, react to it, and see if it actually happens. So if you want to join the Discord, links down below. Love to have you inside of our boot camp tomorrow, this week as well. If not, I'll see you in the next one. Peace, love, and blessings. Talk to you soon. Bye-bye.